I would like to begin by the greetings of Islam. Peace be upon you. Assalamu alaikum. Mr. Chairman, Dr. Yahya Abdul Rahman, Dr. Rafat Abdul Karim, Professor Jamal Badawi, distinguished speakers, honored guests. It's a pleasure and an honor for me to be here. This is my third time I've presented here, and the topics and the overall theme of the sessions are becoming more and more interesting. What I would like to talk about is a little bit away from what my distinguished speakers will talk about today. Basically, what I wanted to talk about is the important role of conventional institutions, Western or Arab, in Islamic finance. Why? It's an interim solution to a final solution of having Islamic banks licensed in the West. The Western institutions provide competition to Islamic banks. Who benefits? The end user on pricing and on choices. The Western institutions also provide training and jobs. They get exposure in the Western media. This entices other conventional institutions to get involved, and the net result of that is a contribution to the growth and development of this niche market. Those of us not fortunate enough to work for an Islamic financial institutions, is there an alternative if you're working for a conventional institution? What can you do to initiate the process, and how? I work for Dow Jones indexes, and we have, as the esteemed chairman stated, over 40 Islamic indexes. How did Dow Jones get involved? And this is not meant to be a template of how to entice other Western institutions to get involved, but it's a template for you to consider. I want to give you an overview of where we are today in terms of development. Right now in the United States, it's basically stage 2 of stage 5, and it's with institutions such as La Riba that we're seeing traction and expansion. And that's a good thing, because that's the solid foundation from which to build on. In terms of product development, we're at stage 2, where the community-based initiatives have set the foundation for the conventional institutions to come on board. Western institutions have been involved in Islamic finance since the 1980s. Institutions such as Engelhardt, Kleinwort Benson, more the financial institutions, but companies wanting to either sell to Muslim countries in a Sharia-compliant way or in a capacity of trying to set up a division. Initially, since the 80s, you've had high net worths and institutional involvement. In the West, there were the community-based initiatives. The deal flow is basically where the Islamic banks in the Gulf, or the Arab banks, Western banks in the Gulf having Islamic windows, they approach the Western institutions in terms of fine-tuning structuring and things like that. What this presentation is not about, and there are other forums for this, is how to establish an Islamic window, how conventional banks are converted to Islamic banks, and what the Sharia issues are in the conversion or establishment of an Islamic window or an Islamic bank. Sample of Western institutions who are involved in Islamic finance. Law firms, the most high profile is King & Spalding. They've done infrastructure, real estate, and a lot of funds. Accounting firms, Ernst & Young out of Bahrain. Private equity, venture capital, management consultants. McKinsey was involved in the TIA Al-Baraka merger, which did not go, but nonetheless they were involved. Investment banks, this is more mandate-driven, where the big institutions, as previously mentioned and will be mentioned, Al-Raji, Sedco, NCB, they basically say, Schroders or Lazard or Goldman, can you manage money in such a way? And they said yes or no. So it's more mandate-driven there. Commercial banks, Citibank, Citi Islamic in 1996, HSBC 2002 in the US, launched HSBC Amana, Noriba, which is a wholly owned subsidiary of UBS, launched in Bahrain last year. And an application has been submitted to the UK for a fully commercial licensed Islamic bank. Hedge funds, Meyer Capital launched will be launching an Islamic hedge fund soon, and Sedco is in the process of launching their hedge fund. I failed, and my due apologies to Saber, is Fannie Mae and Freddie Mac are also involved in this market, and that obviously brings additional legitimacy and credibility to this market. Now, with respect to why aren't the Islamic banks here and the Arab banks opening up Islamic windows here, the Islamic banks in the Gulf countries or Malaysia basically have a country exposure, and the ones that are more aggressive are having a regional exposure. They have enough business. For them at this point in time, there's no need to come to where the Muslims are in the West. And it's a risk-averse mindset at this point where 85% of the transactions have a murabaha aspect of it. The Arab banks or the Pakistani banks or the Malaysian banks, what have you, who have branch offices here, basically have conventional services, letters of credit, traveler's checks, etc. The reason they have Muslims going there is an affinity issue. So in the U.S., you basically have three issues: community-based initiatives, deep-pocketed Muslims in the West who have basically said, well, we want to do something, and Western institutions. Why would a Western financial institution be interested in this? It's usually internally generated, external. Someone comes from outside and approaches the appropriate division head, said, this is a very interesting niche market. No one is doing it. You should look into it. The existing markets for these Western institutions are saturated, so they're looking for new niche markets. It's like the credit card companies with the affinity programs. The Muslim/Islamic market is an affinity undertaking with an emphasis on structure. The demographics of the Muslims living here is probably much better than demographics and psychographics in the Muslims living in the 56 Muslim countries because of a number of issues, and I'll get into that later. These Western banks have presence in most of the Muslim countries, HSBC, Citibank, and they want to see what scholars are involved. Now, with respect to what is their first level of due diligence in America for wanting to offer Sharia-compliant products, they look at, all right, the community-based initiatives, capital issues, trust issues, marketing, etc. The capital issues is one of the shortcomings of the community-based initiatives, but that's offset by the trust that the community-based initiatives have, and that is more important than the capital, because once you have trust, then you've opened the door for products and services. The rest are self-explanatory, and they ask themselves what conventional institutions are involved in Islamic finance. That implies what the entry barriers are. These are examples of basically institutions who basically got involved in Islamic finance either internally. Muhammad Sarugi basically approached John Reed of Citi Bank at that time, and through this whole process, Citi Islamic was established in 1996, and Mr. Sarugi is in charge of it. With Dow Jones, I was fortunate enough to approach from outside to the president of Dow Jones Indexes, saying that there's no one doing this. This is a huge market. It's a growing market. You have an opportunity to add value, make money, and provide a needed service. FTSE followed thereafter. The international investor out of Kuwait basically got into a relationship with FTSE, and they have Islamic indexes. With HSBC, Iqbal Khan and Mr. Kama basically did that. Ismail Dadaboy basically approached UBS because he was head of their Islamic banking window in London. Now, with respect to what undertakings in America have traction and what do not, basically, in America, I think Islamic mortgages is the most sought after product. Not equity funds, but mortgages. They have traction because here you're giving money to the community at large, not taking money and saying that I can manage it much better. And I think when you talk about community-based initiatives which have expanded to involve big institution, you have to talk about what Dr. Yahya Abdul Rahman has done with La Riba in getting Freddie Mae and Fannie Mac involved. You had MSI, Housing Corporation, but they reached capacities. They, for whatever reason, didn't have a Dr. Yahya Abdul Rahman to go to the next level. Foreign banks, once you have the community-based initiative established, what happens is the foreign banks, in this case United Bank of Kuwait, established the Al-Manzil program, and so you have a quasi-institutional approach. Then you had the big institutions getting involved, HSBC, Amana, and Guidance Residential, which isn't as big, but that's the progress. You've got community-based initiatives, you've got foreign bank branches getting involved, then you have institutional involvement. Why the equity market have not gained traction and the mortgages have. These are samples of the assets under management of the Islamic funds in the US and in the UK. It's small and there's been a lot of consolidation. The reason for that is, in very simple terms, the Muslims who've migrated here don't come from an equity culture, so even if you offer Sharia-compliant equity funds, that is not of paramount interest to them. Down the road, yes, this will become important as it's available through their 401k program, but not now. What's happened now is HSBC, for example, will be launching their mortgages in Canada and in the UK this year. You're going to see an increasing role of Freddie Mac and Fannie Mae. You'll see HSBC getting involved with Takaful this year in the United States, and you're going to see, hopefully, vehicle and equipment financing on a larger scale coming into play. Basically, for Dow Jones, the key issues are, yes, you've got something wonderful. It's the right product, the right market demographics, you had growth potential, and low entry barriers. But that wasn't enough for a company. Senior management had to get involved and had to sign off on it. One of the key issues was charges of discrimination, and the discrimination was, if we've got something that's Islamic, are we discriminating against the Christian community, Catholic community, and the Jewish community? Another concern was, will there be picket lines outside saying, why are you doing this in these time periods? No, none of that took place, but the sensitivities to those issues do arise with senior management. When we launched this index, King Hussein died 3 days before we launched this in Bahrain. Obviously, there has to be a lot of sensitivities and caretaking involved when you're doing something like this. For Western institutions, the bottom line is the bottom line. You can have the most wonderful product, but if it doesn't generate revenue, it's going to be closed. Basically, fine, management gets involved, the trial balloon. Are you going to just launch this? We didn't want to launch just an index. We wanted to launch an index in the right place, Bahrain. We wanted to have Sharia scholars there. We wanted to have licensees there. So you didn't have a hollow launch. We had media support. We had banker support. Important things. The media, when Western institutions get involved in this niche market, it's very important on how the media is going to react and what information you're going to give to the media. For example, the Islamic hedge fund that I referred to previously with respect to Meyer Capital, they basically focused on the ethnic media. IslamicQ.com, which unfortunately closed last year when it launched itself, basically targeted itself to the conventional media. So these are some of the issues that you have to think about. What happens when we launch this index and when HSBC launches their stuff is you have people saying, very good, others say, are there ulterior motives? And then for students, they want jobs there. When you have Western institutions getting involved, this adds legitimacy and credibility to this niche market. You have greater coverage by competition, by the media. As I said before, what Al-Ariba has done, I think, is the foundation to what HSBC's involvement, to Guidance Residential, or Fannie Mae, Freddie Mac. We got involved, and FTSE got involved. City Islamic got involved, then UBS got involved. It basically confirms the decision to launch. Continued commitment. What we did was, we have 5 Sharia scholars on our board. 2 months ago, we expanded to include Dr. Dawood Bakar of Malaysia. Continued commitment is very important because the perception is you're not just taking and taking, but you got to give back. So you have to think about additional products or how they can be used. You have to understand failures. There's an issue that I was speaking to Dr. Rafat about. What has more negative implications? Failures in Islamic finance or compliance, if there's no compliance? The issue comes down to compliance. If the financial undertaking has compliance, there's trust in the community, and it'll go forward. Failures is an issue of market-based reactions. Lessons learned, I conclude. Mike, 1 minute? Okay. Lessons learned, basically, you have to, as a Western institution, be receptive to suggestions internally, externally. You got to do your due diligence to the marketplace. There has to be a commitment to the top. You have to have a world-class Sharia board, supported possibly by imams in the United States, taking this as an example. When a Western institution gets involved, it's a financial message, not a political message, and there has to be continued support. You have to be at conferences. You have to pay your dues in being involved, and that's how you're going to take traction.